I think one more person. Okay, good. Since you can hear me, that's awesome. So, guys, welcome. I'm very delighted. I'm happy we're all here today. So, I'll share my screen now, and while we wait for the other person to join, probably he's not able to join, so I might, let's see if I can record this. Okay, I think I should
Recording
record
in
this.
progress.
Can you all see my screen? Yeah. Okay, everybody is mute, right? Okay, that's good. Okay, sorry, I think I was back testing before this. Okay, I think we are complete now. Okay, guys, shall we? Okay. So this is practically what we'll be doing today. I'm recording this session, so in case something is not clear, you can actually demand for it and I will send it to you, but I expect you to be discreet with it. I expect you not to share it out. So I recorded this session because I believe some people might have technical issues and I doubt if I'll be able to like go back and start again. So this is what we'll be doing today. The first is the day one. Under the day one, we have the introduction where I get to know your names, trading experience, trading strategy, and trading challenges. So let's start with this. So the names, please. First person should be Adam Khan, please. Your name. Just unmute yourself and tell us your name. Let's just do it simple. Let's keep it simple, okay? Yeah, Adnan Khan. Are you there? Okay, next person. I think he's not available. Altaf Khan. Okay. No, no, it's not. It's not a problem. It's good. It's fine. It's okay. So what are okay. Okay. So what are your like your trading challenges? What are your challenges? The challenges you find while you're trading? Okay. Good. So you can mute yourself now so the next person can talk. Okay. So Federico, I think you Federico, if you okay, he just typed. Okay, from Italy. Okay, good. Okay, Prihanshun Sogoran. Oh my God, this name is difficult to pronounce.
You can call me Priyansh.
Okay,
Priyanshu.
Prihash. Okay, Prihash.
Priyanshu.
Okay, Priyanshu. Okay.
So my name is Priyanshu Songara, and
Okay.
my trading experience is of almost about 1 year and 8 months. from total,
Okay.
and I've spent about 1 year in Indian market trading options, and
Okay.
uh, there I have live traded for almost a year and beared losses, and the losses were about 28,000 loss I've given to the market in 1 year.
Oh,
That I
okay.
consider small because I have taken 352 trades in that year, and
Okay.
if we divided by 352, then we get I got only 80 rupees loss over one trade. So that's I
Okay.
think with market and the strategy that I used there was SMC. So that was I was not profitable, and
Okay.
within this 8 months,
Okay.
I found fiber style trading works, and you and all of your students. Then I
Okay.
started learning and and I'm making my trading plan about around the algo concepts, and I think that I have figured out algo concepts. About 80 to 90% of your entries, I can definitely go for it, and
Okay.
I'm
That's good.
excited to learn from you because
Okay.
I
Okay.
haven't learned from someone. So that would be a good rule based system that you will taught. Okay,
Yeah. Yeah.
and
Good.
thank you. I want to thank you for giving us the opportunity, beautiful opportunity for free.
Nah, you're welcome.
You are
You're welcome. So I think that's
you
all
are
we
a
take.
humble person. Okay, okay.
Oh,
I'll
thank
be
you.
fast.
Thank you very much. Okay, good. Okay. Um, let's get this going with. So I got to know three of you. The other person from Italy or France. Is it France? Let me check. Okay. From Italy. From Italy. Okay. Okay. Oh, okay. Okay. This is enough for me. So let's proceed. Please, I hope I'm audible enough. Please, hope I'm audible enough. You can hear me.
Yeah, you are.
Okay,
Hello.
awesome. Awesome. Awesome.
Hello.
So, okay, hello. Did someone just say hello? Hello, guys. Am I audible enough?
Yeah, you are.
Okay, 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 okay. Good. So, next online is expectations. So I want to put that in check because it's very, very important. So first thing you have to know is there is no holy grail. I believe you've heard this or you've seen this a lot on YouTube, but I still want to emphasize on it. The fact is we take a lot of losses, and if someone should come up to you and tell you that a certain strategy is the holy grail, then you should take your money and just walk away, because in the financial markets there is no holy grail, and you're there to actually lose money. These guys want you to pay and lose money. So that is the goal, for you to come and lose your money. So there is no holy grail. You can imagine there are lots of manipulations in the financial markets. So anybody telling you or selling you a course and saying it's a holy grail, then you should run away from that person. And second, this is not 100% win rate. Um, the win rate is ranging from 50 to 70%. So I get a 60% win rate. Sometimes I get 70% win rate, but it's never 100% win rate. There is no strategy that is 100% win rate. There is no strategy that has 100% win rates. That is a lie. Okay, you have to know that this is the first thing on this course outline, because it is very, very important. You see a lot of people selling a lot of shit on the internet and telling you this is the holy grail, 100% win rate. You won't get to lose your money. It's a big lie. You will lose a lot of money. You will lose money while trading. You will. Trading algo, trading SMC, trading any strategy at all, you will definitely lose money. And next thing there is losses are inevitable trading the algo ways. Yes, maybe we don't get to post our losses, but then I just want you to know that losses are inevitable. Same way, um, other strategies that you've done or you've used before frustrates you, is the same frustration you're going to get. But the joyful part of it is I'm here to guide you, because I can teach you the entire thing here, everything. I can teach you everything here, and you still won't be profitable without proper guidance. So I'll be here to guide you. If you got any question, if you require a Zoom session with me, you're practically my students. So anytime, any day, if you have any issues, any challenges, you can, my DM is open, and you can meet me, and I will host a Zoom session, particularly or privately, and then we'll tackle it. Now, basic stage. We're doing everything. This is something we're supposed to do. If it's a normal mentorship, we're supposed to do this day one. We treat all this in one day, and day two we treat all this. We have about 6 days, but we'll be doing everything today. So just you guys should get ready. It's going to be like a 2 or 3 hour Zoom session. So it's going to be a long session, though. Every hour we'll go for a break. So every hour we go for a break. You drink water. I'll send you another link, and then we continue. Okay. So basic stage. Here we have price and structure. I'm not going to touch this because unless there is somebody that doesn't know what a trend, a bullish trend, a bearish trend, and a ranging market is. So if you don't understand what this is, please just signify by saying hi. And if you do, just type skip. So I'll skip it. If you know what this is, type skip and I'll skip it. Okay? Okay. Sorry. Adnan Khan, he said, I cannot hear everything from you. How about now? Can you hear me? I want to be sure. Okay, you can hear me now. Awesome. Beautiful. So I'm skipping this. Everybody said skip. So next online is the external and internal structure. And under the external internal structure, we have subjective and objective structure. So what does this mean? So let's say we have this as our structure. Let's use the 1 hour time frame. For example, let's say we have this as our structure, and this is the 1 hour time frame. Okay, so this on the 1 hour, on the 15 minutes, it is going to look like this. This exact thing I drew on the left hand side is what is going to be on the right hand side here. Okay, so this is practically the same thing. Okay, now let's say this is the 5M. Okay, this is the 5 minutes. So on the 1 hour, this is clearly a bullish trend on the 1 hour. Clearly, this is a bullish trend on the 1 hour. Okay, and these are the structural points. We have the higher low, the higher high, we have higher low, we have higher low, and higher high. Now, when you go to the 5 minutes, which is this, you tend to see that from here we have higher low, higher high, we have higher lows and higher highs until this point where price broke this structure and started creating lower lows and lower highs. Now, where most or many traders get it wrong is when they start seeing this pullback as a change in trend. Okay, when they start seeing this pullback as a change in trend, so they get clouded in that illusion that the fact that price has broken this level of structure, right, price has changed its trend. But when you're coming from the much higher time frame, you get to know that you are still very much bullish. You are still bullish on this time frame. So this is the subjective structure, while this on the 1 hour is the objective structure. And what do we work with while trading algo? We work with the objective structure. Okay, we work with will confuse you. I'm not saying trading this is bad, no, but you will just be clouded. Okay, so you stick to this. Any question? Can I proceed? Okay, good. Okay, everybody, good. Okay, good. If you have a question, just type it. I'll see it first. Yes. 1 hour. 1 hour. It should be your higher or highest time frame for the time being. But when the 1 hour is not too clear, that is when you have to be flexible and go to the 4 hours or even the daily. But you have to work with the 1 hour. The 1 hour is better. The 1 hour gives you clear structure. It gives you clear structure. Okay. The only time you counter trend is when order flow has changed, and we will get there in due time. Okay. So the next thing. Okay, awesome. Next thing is the manipulation stage. The manipulation stage is very important. I believe you've seen this before. The manipulation stage, we have the retail concept. The retail concept comprises of the support and resistance traders, the chart pattern traders, and the smart money traders. And so let's do that. Let's do that. Okay. Okay, so first will be the support and resistance traders. Second will be the smart money traders. And let's see if I'm forgetting something. So we have support and resistance traders, chart patterns. Okay, we have chart pattern traders. So I think they'll come here. To be here. And we have algo traders. Okay, so we'll start with the support and resistance traders. Like most of us know. Okay, so this is how, because we are now on the manipulation stage. We are now in the manipulation stage. So what this is talking about is getting to know how other trading concepts, how other strategy can also serve as a liquidity pool for you, can also serve as a further confluence to your entry. Okay, it gives you more room, it gives you more confluences, more reason why you should take a certain trade. Okay, so I've traded these supports and resistance before. So I I can tell you, I know how it works. So while we were trading support and resistance, while I started trading Forex, I started with support and resistance, and it was quite beautiful. We had this good mentor. He mentored us very well. And then Forex was easier than it is now, probably because we had less people in the financial market then. That was 4 or 5 years back. But like we had less people, unlike now. Now everybody wants to get into trading. So the market tends to be very, very manipulated now. So then it was easy. So people who started trading before find it very, very difficult now because the stuffs that worked, it actually worked before. But right now it's been manipulated because these guys, once your order come through, so once you place a buy, here, your trades are being sent directly to those guys, and they know how many numbers. They can tell you that 5 million people are actually buying at this particular zone. So when they have this data in their hand, when they have this data in possession, if they can tell you the number of people that bought here, it simply means they know the number or the amount of money, and money is liquidity, as we all know. They know the amount of money that is here. So when people are buying here, they know where their stop losses are. Their stop losses is the money. So when people are buying here, they know how to come grab the stop losses, and then the rest is history. Okay? So now for the support and resistance traders, so this is the support, right? This is the support, this is the resistance. The resistance, they say, is the ceiling. I still remember how to trade this. So when the resistance, when price breaks this resistance, it comes back and turns support. So when price breaks this high, breaks this resistance, once it's coming back, they draw a zone like this. Okay, they draw a zone like this, and coupled with the Fibonacci tool, they tell you that when price takes out 50%, so price is at a discounted price and it's aligning with the support or resistance turn support, they take a buy here. Now I want to tell you why they are being manipulated. For example, I am trading the supports and resistance. I trade the support and resistance way, and I place my buy here. This is where my stop loss is going to be. My stop loss is definitely going to be below that low. Okay, because my stop loss have to be protected by structure. So when my stop loss is here, okay, below this particular low, not at the low, it has to be below the low for it to be protected by structure. So if my stop loss is being protected by structure, where is the money? The money is certainly lying at this low here. Okay, I believe and hope that you guys are following me here, because this is the ideology. Good. That's to notify me that you're hearing me. Awesome. So this is the ideology behind their manipulation. So what does price do here? Price gives these guys a certain form of reaction at this resistance turn support and comes to take their stop loss. And you see exactly immediately price takes their stop loss, price tends to move away very fast. It moves very fast. Now, trading this way, you get frustrated and you start feeling, when you see traders say, it seems the market is haunting me. This is what they mean. Because when you're trading this way, there are lots of volume here. Money, this is resting below this low. Now, these guys are trading based off the fact that this is a significant level. This zone is a significant level. So when it breaks this zone, it comes back and retests at this zone. right? To make the next impulsive move. But what does price do? It comes, give them a little reaction, enticing more people to enter this buy before taking them out. So immediately price takes them out, you start seeing their moves very, very fast to the upside. Okay, so if you understand this, if you have any question, please type in your question. If there's no question, just type in continue, so I would know you're following me. Okay. Okay. Continue. Who's next? Continue. Awesome. Continue. Okay, I think we have one more person. Good, good. That's all. So everybody's following then. That's awesome. Beautiful. So we have chart pattern traders. Don't think these particular patterns, these particular traders have gone extinct. No, these guys are still trading, and they are being used for liquidity some of the time. And it's very important to know how these guys are also being used as a form of liquidity, because right now, okay, let me just draw this. So I will use this as my first example. Okay, so first off, we have this low, this high, this low, and we have this high. So the chart pattern traders are seeing this as a potential head and shoulder. Okay, so if you've traded chart pattern before, you understand what I'm saying. So at this very point, they are expecting price to reverse. So once price gives them, before it even forms this leg, so once they see price at this high here, once price is at this high here, they anticipate its reversal. They see this as head and shoulder. So this is the left shoulder that has already formed, and they are waiting for the right shoulder to form. Remember, they have maybe like a good zone at this place or at this place from the much higher time frame. So what they do is they wait for patterns like this, chart patterns, bearish pennant, bearish flag, or bullish flag, or bearish pyramid, or whatsoever they call it, to form and anticipate a reversal. So when chart pattern traders see this before this leg forms, when they see this forming, they anticipate a reversal. When they are trading this, let's say they're anticipating this reversal, where would their stop loss be? Definitely at this high. So if their stop loss is here, what does it mean? It means the money is here. So if the money is there, it simply means that is where liquidity is resting. So price is most likely going to shoot up and continue going up, or go and form this. We call this price behavior in algo. We'll get there in no time. So price is most likely going to take their stop losses at this high before dropping. Now, their bias is right, yes, but their approach is wrong. Meaning they are anticipating the reversal, correct, but they are being used as liquidity. Okay, because I want you to understand this very, very careful. Very, very careful, because this is how you view the markets. So maybe you were trying to trade off New York or London. So you go to the Asian session and start marking out these things, these important points, this, highlighting these levels. It helps you have a better understanding of the market, so you can actually tell where the liquidity is. Now, you can be 30% wrong all the time, but you can be 70% right. And 70% while trading the Forex market is a genius. You're a genius. That is why the introduction states that this is not a 100% win rate. You will take losses. Yes, agree. Believe me, you will definitely, certainly take losses. Okay? So now I have explained how these guys are being manipulated. I have told you how these guys are being manipulated. Now I'm telling you how these chart pattern traders are also being manipulated. We can sit here and talk about chart patterns the whole day. I've traded this and I know how it works. I've traded this and I know how it works. We also have another chart pattern. I think they call it the pennant. I think I'll be needing. Okay, let me delete this. So if you want to take screenshots, you can take screenshots. I'm giving you 1 minute if you feel like it's necessary. If it's not, I want to delete this so I can draw the next chart pattern. So I'm giving you 1 minute if you feel like taking screenshots of this. Okay, this is enough time because we have a lot to do. Now, the next one online is I think many of you have seen this. And what they tell you is this, I believe I'm drawing this correctly. I don't know. I think this has to be like this too like this. Then this comes like this. Awesome. This is how it is. So the belief here is that once it takes this, it drops. I think this is for a bearish scenario. Yeah, if I'm not mistaken. This is for a bearish scenario. And they tell you that once it takes this high, once it takes this high, once you see this particular chart pattern forming, they tell you to anticipate a reversal. Okay, but in essence, this in algo is what we call the build up. We call this the build up in algo, and it's a very important technique. This is what we call build up in algo. Now, when we get to build up, you get to understand why it's been called build up. But for now, I won't explain this. But how are these guys being manipulated? So when they are trading off this, so this might be like the retest. So maybe expecting a retest around this zone. So when they want to enter, their stop loss is going to be above this high. And when I say stop loss, I mean money. When I say money, I mean liquidity. So when their stop loss is residing up here, then you know price is most likely going to take their stop loss before dropping, or even not dropping. It might keep going up. Okay, there are lots of chart patterns, but I'm only going to deal with these two because they are the frequent ones in the market. These are the ones that happen every day. When I say every day, I mean every day. This thing happen every day, especially this build up. Build up and the head and shoulder chart pattern, they happen every day. Okay, so let's not just waste our time here. The next one is the smart money traders. Awesome. The next one is the smart money traders, and you of all people know this better. That this is how, because I traded smart money as well, and we trade based off order block. Okay, with at a discounted price, I believe. So we trade based off order block. So we have this order block. Come on. So we have this order block here. We have this other block here. We have another one here. So how does the smart money, guys, get manipulated? It's very simple. I believe you've seen this in so many algo courses, so I won't go deep into this. It's just very, very simple. The fact that this thing is being left for you guys in plain sight is obviously or most likely going to be a manipulation. So we have this order block, order block, order block, order block, order block. So they tell you when price gets to a discounted price and gets to an order block on the 1 hour, you can either wait for price to change, give you a break of structure on the 1 minute or 3 minutes and enter. But you've traded these countless times and you see that it doesn't yield anything. It doesn't yield anything. You just keep getting stopped out and stopped out. Why is that so? So when this strategy states that you trade off order block at the impulsive leg, so meaning that when price gets here and I pull my buy to, or I buy the price at this zone, my stop loss is most likely going to be resting below this low. It's most likely to be resting below this low. Now, when stop loss is resting there, it clearly means that liquidity is here. And liquidity is what moves the market. So when these guys comes to grab the money here, the next move is always swift and fast. Very, very fast to the opposite direction. So you have to know where the liquidity is residing. When you know where the liquidity is residing, you will have an edge in the markets. I want you to see these three pictures and tell me what is different here. There's absolutely nothing different. Look at the head and shoulder chart patterns. Where was manipulated? The low. So the head and shoulder chart patterns, the support and resistance chart patterns was manipulated at this zone. Sorry, let me just put this. They were manipulated at this zone. Their stop loss was here. Where do you think the smart money traders too were manipulated? Definitely at this zone. So both the support and resistance and the smart money traders, they are the same thing. They are all being manipulated. Same manipulation, same swing low, same. Everything is same. They just have different names and different approach to the markets, but they are same thing. They are the same thing. It's just that the support and resistance trader will take an early loss here, while the smart money traders will take a loss, but later, and they will still take the loss here. Okay? Are you guys with me? If you're with me, please say hi. Just hi. Good. Okay. Okay. Awesome. So any question? If you're lost, please, you can ask questions. No questions, I assume. Okay, good. So now for the algo traders. So we've treated support and resistance. We've treated chart patterns, smart money, algo. Now, okay, somebody typed. Oh, perfect. Good. Awesome. So for these guys, the algo traders, we just simply, okay. So when we have this, and them. So this is what we wait for liquidity to be grabbed before taking an entry. Meanwhile, we use them as liquidity. Okay. If you want to take a screenshot, you can do that now. As we're moving to the next topic, we have limited time. We have limited time. So you can take a screenshot now. Okay, awesome. Done. Good. So next, we've done support and resistance, chart patterns, smart money. We've treated the ideology behind their manipulation, reason for manipulation. Definitely, we've already talked about it when I said money, liquidity, because we understand and that liquidity moves the market. So that is the ideology behind it. Why are they being manipulated? What is the reason behind their manipulation? And we all agreed that it is liquidity. It is their stop losses. Price is going to grab their stops before moving to their desired direction. Okay, so next is highs, swing highs and swing lows. Under the swing highs and swing lows, we have session highs and session lows. So we'll treat the swing highs and swing lows, then we'll go for a 10-minute break. So you all should go and take water. We'll take water and then we'll return in 10 minutes time. So let's talk about the highs and lows. We have swing highs and swing lows. Remember, we are in day 2. And on day 2, it is the manipulation stage we are discussing. And the manipulation stage has the retail concept, which we just talked about. And the next one is highs and lows. Meaning under the manipulation stage, we have highs and lows. How highs and lows are being manipulated. Okay? Then under it, we have session highs and session lows. Now, we said highs and lows. So I won't dwell much on this because this is not the major thing we're supposed to be doing, but just get the concepts. So if this is your trend, and we already agreed and understood that there is a possibility that support and resistance traders will be manipulated here. Smart money traders will be manipulated here, trading up order block at this zone, right? So we agree that there's money at this low. There's no debate about it. So we all agree that money is here. So if money is there, we expect the money to be taken. So this high is a liquidity point. Sorry, this low. This low is a liquidity point. And we already know the reasons why they are liquidity points. First off, these traders. Second off, smart money traders. And then we have a lot of trail stops at this zone. So there are buyers who took or who take a buy at this zone and are running in good profits. So what they do is once price break the structure, they shift their stop loss to this structural low. So once price breaks another structure, they shift it to this structural low. So once price breaks the structure again, they shift it here. So it's several confluences why this is a structural low, is a liquidity point, is a structural high or structural low, where liquidity is meant to be grabbed. Okay. Oh my God, mistakenly deleted it. But so we've all agreed that the lows are liquidity points. So this low here for the uptrend is a liquidity point. Remember, when you want to talk about the downtrend, it has to be inverse. It has to be inverse. Okay. So What is the next thing online? We have session highs and session lows. So while doing this, I actually like teaching while showing it on the charts. I actually prefer to teach and show it on charts. It's more real and okay. So let me on my session tools. Okay, we have session highs. The topic here is session highs as liquidity session highs and session lows. So sorry guys, I just trying to get a good view. Okay, so let's use this as an example. Let's use this as an example. So the red box is my Asian session. The purple box is my London session. And the green box is my New York session. Okay, I think this was 2 days back. Yes, this was Thursday. This was Thursday. This was 2 days back. Okay. Let's not focus on the entries. Let's focus on the topic here. Okay. So we're talking about the session highs and session lows as liquidity pool. Okay. So remember, we are still in the manipulation stage. We have finished stage 1. We are in stage 2, and stage 2 is all about manipulation. So on the manipulation stage, we talked about the retail concepts. I'm doing a prior review. And the retail concept comprises of smart money, chart patterns, and and support and resistance traders. That we've done. And then on this second phase of the manipulation stage, we have highs and lows. Now, under the highs and lows, we've talked about how highs and lows have been manipulated. Correct. For example, this is a low that was manipulated. This is a clean entry here, a clean entry to complete the algo circle. Okay, this low was clearly manipulated. Okay, and well, let's not go deep in. Let's not go into that. We'll get to that in no time. Okay. I hope you guys are following though. So, like I said, this is the Asian high. Let me highlight it. It's best I write it. Asian low. Okay. So this is the Asian low. What is wrong with me, clone? And this is the Asian high. So next is this is London low. And London high. So this is London high. Now, let me zoom in properly. I don't want anyone getting confused. Okay, let me go to the 3 minutes. I think it's better, or 5 minutes. I think it's better. Awesome, awesome. Okay, sorry guys, a little bit of distraction. Let me put my phone on silent. Okay, I just did it. So this is the Asian low. This is the Asian high. Now, these are liquidity pools, right? The Asian low and the Asian high can serve as liquidity pool, but they can't stand on their own. So what am I saying here? What I'm saying is The fact that this is the Asian session and I get this as my Asian session, this is the Asian box, and this is the London Open. The fact that this is the Asian low doesn't mean I'll take this buy. No. Now, what I mean is the Asian high or session high, whatever session it is, right, has to be subjective to algo. So when I mean subjective to algo, I mean we have this structure. Okay, sorry guys, sorry. Let's say we have this structure already displaying before the Asian session. Okay, and this is the Asian high, low, sorry, and Asian high. Okay, so London kicks in. Now, if London takes this, remember this is your swing point. This is going to be your swing point. So when London comes and takes the Asian low, now the Asian low serves as additional confluence to your algo, because this is your algo already. This is your last swing point. This is where you are anticipating price to grab before taking your buy. So meaning you're not taking this Asian low as a objective trade. You are taking it subjective to the fact that the algo is objective to it. So the reason why I would enter this buy is because I am seeing my algo trade and I am seeing this Asian low as additional confluence to my entry. It only serves as additional confluence. It can't stand on its own. Sometimes it does. No algo, it just moves. But how many times? That's when you should ask yourself, how many times does this happen in the market? Out of 10 times, how many times does it happen? If it happens less than 5 times, then it is not a high probability trade. But when you combine it with algo has to be objective. Then Asian low, Asian high, London low, London high, they are all subjective. Please, if you get me to this point, say hi. If you get me to this point, I just want to make sure that everybody is following.
Yeah, hi.
Okay, good. Awesome. So as you can see, price here took, this was the high, this was the lowest or the last swing point. So price took it. I didn't take this buy because I was more focused on the sell, right? I didn't take this buy, I missed it. But this was a good buy opportunity to the upside. And as you can see, as you all can see, it's actually moved nicely to the upside. It's moved very well to the upside. Okay, so it is subjective. The Asian high, Asian low, London high, London low, they are all subjective to the major algo. Okay, so what do we have next? I used Asian session as an example. It does not mean it does not happen in the London session. Let me look for an example that the London high was grabbed. Okay, this. So first off, we have our Asian low and we have our Asian high. Price grabbed the Asian low and moved up. This was the London, the blue, purple, I mean, is London session. So this was London high, and this, this was London low, and this was London high. During New York came to grab London low and moved. But when you look at it thoroughly, it just means New York came to grab this algo here, because this was a clear order block. As you can see, it gave a good reaction, but at the end of the day, it grabbed it, it took it, and you can see it exploded to the upside. It was a very good move. I think I took this buy. It was a very, very good move. No, I took this buy, but it took me out break even here. But at the end of the day, it was a good trade. It was a good trade. So as you can see, I used Asian session as an example for one, and I used the London session, but the New York doesn't have any liquidity at the top or at the bottom. It's just there because the last session before the next day starts. So there is nothing there practically. I don't know, maybe another person will teach you something different, but I have back tested it and I see that there is nothing there. So guys, let's move. We've talked about the Asian highs and low, London high and low, and we have previous daily high and previous daily low. So what's the time? Okay, guys, I'll end this session now. 5 minutes. You all should just go and drink water. 5 minutes, we'll come back. Okay.
Okay.
Yeah, I'll send another link right now. So 5 minute time, I'll send another link.